So let's talk about the best investment advice you ever received from anybody, either David Swensen or Stan Druckenmiller, or anybody. What's the best investment advice you ever received?
Was to admit mistakes. That's one. And also to be brave. I think like after March 2020, when you saw the downturn, then I wanted to make sure that after that managers were putting risk back on. And I think you can't, you have to be brave. And I think, and then from Stan, the risk management is something that is really key to how I think about management.
Now, you've seen investors who are professional and non-professional over the years. What do you think the most common mistake is that investors make?
Yeah, I think right now there's so much fast news, like you get news from all over the world, some of it different and all that. And I think there needs to be patience, and also people like the meme stocks and some of those things, people get caught up in a lot of these really quick money-making things and all that. I think in the long run for a person who has an investment portfolio or a retirement fund, they should be thinking in the long run, and they should have mutual funds mostly for, I always say don't do what we do in endowments at home, because you can't do some of the things that we do.
So let's suppose you're at a cocktail party in New York or Maine or wherever it might be, and somebody has told you manage the endowment for the Rockefeller University. They say to you, well, I have an extra $100,000. What should I do with it? What do you tell the average person who, for $100,000 might be a fair bit for an average person, what do you tell them to do with their money?
Well, right now I would say I think you need to wait a little bit. Don't dive right there in the market. But I would say do a diversified portfolio. You need to think about what your cash flows are going to be. Like at Rockefeller, the first thing I do every Monday is look at our cash flow needs, capital calls, spending, all that. I want to see what the cash is. So I would think you need to look at your liquidity needs. And then you need to invest mostly in mutual funds for smaller investments, because you can't get into some of the funds that we're in. And then also, different sectors can be very interesting, but a lot of index, S&P 500 to make you sleep at, well at night.